get to the macro picture. US inflation slowing to below 3% for the first time in nearly 3.5 years. Lucas Santos from ACY Securities joins me to discuss. So very busy in terms of what we're seeing from Fed pricing now, right?
That's correct. And actually, before we even start, you asked me if the earnings season has something to do on my side, on the Forex side. In a sense, it doesn't, right? But things like the Fed, the Bank of Japan, all of those central banks definitely has a lot to do on the Forex aspect. And yes, 2.9% inflation on the US. And I was actually looking at the numbers since the 13th of December in 2023, last year, we were at 3%. So pretty good progress from December, let's call it January, from January this year to August from the last release this week. So pretty good disinflation scenario, I would say, but still a lot to be done by the Fed.
Yeah, indeed. But a lot in terms of, the market pricing in, I think, a 76% chance of a cut, but about a 50% chance that you could see 50 basis points.
Yeah, but look, this is one of the things, right? I was, 2 weeks ago, I was looking at the CME Fed Watch tool. I think that's pretty well known to about all the traders around the globe, where we can see the market participants, how much are they priced in, how much are they expecting to the Fed to cut in the next meeting. We all know that we don't have a meeting this August, but we have a meeting on September. For the meeting of September, 3 days ago, were 50-50, all right? So 50% chance, 48.6% chance for 50 basis point cut, and the rest was a 25 basis point cut. And then I start to question myself, how those market participants are looking at a possibility of a 50%, nearly a 50% chance of a 50 basis point cut. How is this possible? And it's not possible because that was sort of a inflation move on the participation expectations. And now we, of course, 80% expecting a 25 basis point cut. That I do believe that it's possible, okay? Especially with the non-farm payroll we had, the average hourly earnings, and the CPI that we just had this week. So putting all together, most probably on the 18th of September, we would have a cut of 25 basis point cut from the Fed.
What does that mean for the dollar then?
Well, that's the gold question, right? Because everyone wants to know what's going to happen with the US dollar. In my opinion, the US dollar is losing a bit of strength already. If we're, we can see from the Euro dollar, Aussie dollar, USD JPY.
Yeah, that's been a big turnaround.
But that's a very different scenario because of the Japanese yen. But anyway, so the US dollar will continue to lose this strength because the other central banks, like the ECB, the European Central Bank, or for instance the Bank of England, or the Bank of Canada, or the other G10, G12 central banks, they will maintain a sort of neutral to hawkish approach. Because we have to remember, right? Inflation is not under control. It's becoming under control. So there is a lot of to do yet on the Fed. 3%, yes, 2.9%, good, but they have to bring down now to 2%. And that's what I always say. We had inflation at 7, 8%, right? So the 3 to 4% is easy to come back. But now the rest, the remaining, that's the 3%, that's the hardest part. And they have to be very careful.
Yeah.
As just Michelle Bullock just said this morning.
Yeah, well, let's talk about that because she is speaking in Canberra. She has said again that it's too early to talk about cuts.
Definitely, of course.
What does that mean then for the dollar, our dollar?
For the Australian dollar, of course. Yeah, so we had the past release of the CPI. I think in January or February, I came here and say everyone was expecting a cut from the Australian for the Reserve Bank of Australia, and I was like, no, we won't cut and we won't hike, but we will continue to maintain it for a long period of time, probably until first quarter next year. All right, if you want to talk about when they will cut, probably next year, the first quarter. Going to the second quarter, like in the maybe February, March, okay? But now, what does that mean for the Australian dollar is probably will strengthen a little bit, but not against the Japanese yen and not against the US dollar, because the Fed is doing much a better job than the RBA in this sort of instance. So if you're an investor looking to put your money somewhere, you would prefer to put on a smarter country than the other, right? I don't want to talk bad about Australia, but the USA is doing a better job than RBA at this moment. So probably weaken against the US dollar and weaken against the Japanese yen as well.
Well, almost out of time, but a quick word on the yen, because a week is a long time in Forex markets, a fortnight even longer. I mean, we're nearly at that 2-week mark of that big unwind of the carry trade.
Yeah, a big surprise, right?
Yeah.
25 base point there. Yes. So for the yen, I was actually just talking to one of the participants that came here last time I came in, and he was like, I want to travel to Japan. What do you think about the yen? I missed that trade. I was like, yeah, it's more than welcome. You can go now. It's going to be beautiful. And then today he told me, mate, I'm not going to Japan anymore because the yen is too expensive.
Can't he just buy some currency before he goes?
Yeah, true, exactly. Anyways, so yen, yes, yen will continue to strengthen. I think this is the time that most of the investors were awaiting for 30 years, right?
Yeah.
And we just had the chance. So the Bank of Japan will continue to have this hawkish instance, I would say, towards the Japanese yen. And they were pretty smart because when they've done the manipulation, that I don't want to call manipulation, they've done on the USA CPI. So that was a pretty good effect. So much cheaper and much more larger effect. So yes, Japanese yen will continue to be for hawkish in my instance.